And joining me now is Chantal Marx from FNB Wealth and Investments to give us her take on the market's activity. Chantal, thanks so much for your time this afternoon. Now, markets seem to be shrugging off those tariff jitters yet again, and focus, as I mentioned, has shifted to U.S. inflation numbers that print out later today. Is the June print the one where we'll start seeing perhaps the real impact Trump's trade policies have had on prices?
Absolutely not. I think when we look at the print that we're going to get in June, it's going to signal an increase in inflation, but that's going to be mostly because of base impacts.
Okay.
I think when we think about the tariff impact, that will only come through once we've got an actual implementation date on the broader tariff landscape. So we have had the implementation of certain tariffs taking place, but it wouldn't have been much in terms of moving the needle for the June period specifically. I would expect us to only start seeing a meaningful change later in the year, because apart from the fact that we've had these delays, a lot of companies will also front run their orders, build up inventories at lower rates before they're having to be forced to buy, let's say, for example, inputs for a US manufacturer from Southeast Asia, or before a Walmart has to buy stock at a higher level.
And I've been thinking about how uncertain this environment is for corporates to navigate. And here we are starting another, quarterly earnings season. And I can't... I'm sure we're going to get companies still uncertain when it comes to their outlook, their forecast, because we still don't have, an implementation date for those reciprocal tariffs.
Yes, I mean, it's going to be quite interesting, and I think it's going to be very sector specific. So this week we're going to be focusing on financials. The US economy is kind of bumbling along quite nicely.
Yeah.
We haven't really seen a massive reduction in activity, so they should be fine. Then we have a period where we're going to see these tech stocks coming out with results, and the tech stocks really benefiting from the AI boom and that structural and thematic support from that. And we haven't really seen any commentary from these management teams indicating that there's been a drop in demand. So that should also be fine. But towards the back end of earnings season, that's when we start seeing these consumer stocks coming out with numbers. And there, I don't necessarily think the second quarter is going to be a terrible quarter for them, but I think guidance is going to be key in terms of what they expect going forward.
Now, across the Atlantic, traders are eyeing Rachel Reeves' Mansion House speech. Of course, Reeves has been facing mounting pressure to deliver a plan that will, plug the fiscal holes and drive investment. Is this something you'll be keeping an eye on today?
Yeah, I mean, certainly it will be quite important just from an overall market stability perspective as well. We want the UK to be in a better position than it has been in. We'll be watching that closely. Of course, we also have a lot of South African corporates that do substantial business in that jurisdiction. So anything that relates to possible impacts on businesses operating out of South Africa are listed in the JSE, but operating in the UK, I think will be quite meaningful.
And turning our focus now to China, growth coming in at 5.2% in Q2, above expectations but slower than the 5.4% growth rate recorded in the first quarter. While the number is good, there are concerns about deflation, which then speaks to, the low consumption in the country, right?
Yeah, I mean, so what we saw really driving that figure in the second quarter was the boost to exports, a higher than expected boost to exports and lower than expected imports. And what that tells us is that demand for Chinese goods was still strong externally, probably some front running related to tariffs, but domestic demand remains an issue for that economy. And I think in the context of a broader fragmentation of trade relationships globally, it is definitely a concern for them. But I think we must take away that we've still got over 5% growth coming through from China. And in the South African context, I think in terms of demand for the raw materials and minerals that we produce, hopefully that means that it will hold up longer.
Are we seeing a sharp uptick in the industrial on the back of that report?
Yes, absolutely. So I think that we did see a really nice rally in Chinese stocks this morning. Definitely a bit of a lift there, and the tech space doing particularly well. And that strong 10-cent outcome this morning filtering through to Naspers and Prosus results. And I mean, I think that I would have expected a little bit more of a pop in commodity prices as well on the back of those numbers, but perhaps the reservations that we've given already that were also echoed by the Chinese statistics relationship, perhaps keeping enthusiasm in check for now.
And sticking with the commodities scene, coming back home, mining production numbers surprising to the upside, rising 0.2% in May. Does this indicate that the tide is slowly turning for mining production? I mean, we've had months on months of downbeat production numbers.
Yeah, I mean, we can only hope. I think that sometimes these numbers tend to be quite chunky. If you look at the underlying drivers of the better number, gold really playing a substantial role there. So hopefully we will continue to benefit from higher gold prices and gold producers deciding to up the ante in terms of production a little bit. But some of the more volatile groupings also contributed quite positively, notably diamonds, which has been very volatile and tends to be quite chunky. So I wouldn't read too much into the trend. The trend that I did see that I would back and that I think we can be very positive about is the sales figures, because we've got mining production and sales figures, and the sales figures are up really nicely on the back of this gold rally, which is, of course, reads through very positively to South Africa's terms of trade.
And perhaps in the following months, we might start seeing the higher PGM prices starting to reflect in that print. And company news, slim day, but we do have 91 reporting an uptick in assets under management. No surprise, right, considering that it also includes 1.9 billion pounds from the transfer of Sanlam Investments UK active asset management business to 91 UK.
Yeah, I mean, it certainly helped, but I think even when you strip that out, you still have an increase in AUM of over 7% year on year. That is reflective, of course, of quite buoyant markets, particularly in the South African market, and then to a lesser extent, international markets. But it can also mean that we've seen a continued reduction in the pace of outflows, which has been an issue for the savings industry for a very long time. So yeah, I mean, I'm quite positive about that number. Very funnily enough, I just had a notification flash up on my screen from one of our data providers saying that BlackRock also saw a much larger than expected increase in its asset under management. So it does seem as if the asset managers are performing quite well, even amid all the chaos that we're dealing with at the moment.
Very surprising, amid the chaos, amid the uncertainty, amid all the tariff drama, Chantal. But before I let you go, let's get your stock pick.
So chaos means high volatility. High volatility means high trading volumes. And my stock pick for today is the JSE Limited. I had a look at earnings expectations for the next 3 years for that company. And it is quite benign, while we've at the same time seen a very nice appreciation in the All Share Index, a move outside of the US towards other markets, and that volatility certainly aiding trading volumes and revenue by extension.
All right, JSE one to look out for. Chantal, thanks so much for your time and taking us through trade at midday. Now that was Chantal Marx from FNB Wealth and Investments.